So a cheeseburger, french fries, chicken nuggets, and a drink, all for $5. Sound like a pretty good deal here? Well, we have the details coming up on Business Matters. Good afternoon, and thank you so much for being here with me. I'm your host, Donma, and as you can see, we're back here in our old set. And with that, we're going to start with markets. S&P 500 and NASDAQ ended lower today, but earlier, the S&P 500 hit the crucial 5,500 point mark for the first time ever. Now, shares of NVIDIA, though, dropped after rising earlier in the session. Meanwhile, investors are also evaluating recent economic data and commentary from Federal Reserve officials to determine as to the timing of interest rate cuts for this year. And speaking of which, Minneapolis Fed President Neel Kashkari said that it would take about a year or two to get inflation back to 2%, which is the Fed's target. And this is, of course, as wage growth might still be too high, and that is spurring worries of interest rates staying elevated for longer. All right, moving on. Breaking news here. New York Governor Kathy Hochul just signed a landmark bill today to ban addictive social media feeds for kids. And it is the first such law in the entire country. Now, the Safe for Kids bill targets apps like TikTok, for example, and Instagram. It's aimed at algorithms that keep children hooked on phones for profit. Take a listen.
The damaging effect of social media's addictive algorithms, weaponized to use children's personal information, extracting millions of data points about their preferences, what they want to do, where they're going. They use all this to hold them captive to a barrage of unsolicited images and messages, and that must be stopped right now.
Okay, let me explain here. Under the new law, children can only view a chronological timeline on social media apps without parental consent. And this is aimed at eliminating addictive algorithmic feeds. So the bill takes effect 180 days after Attorney General Letitia James establishes user age guidelines and a parental consent mechanism. All right, as I mentioned in the beginning, McDonald's has revealed the long-awaited details of its anticipated $5 value meal, which the fast food chain hopes is going to lure back customers and boost sales. So let me talk more about this. The limited time deal will be rolled out on June 25th, and it's going to last about a month at some restaurants across the U.S. The meal will include a McDouble cheeseburger or McChicken sandwich, and on top of that, small French fries, 4-piece chicken nuggets, and a small soft drink. The president of McDonald's USA says they have heard fans loud and clear, and the response comes after viral social media posts circulating that the fast food chain has raised prices faster than inflation. Burger King is also considering a $5 meal, but we haven't had the details just yet. Okay, moving on to some earning-related news. Mixed results for Darden Restaurants, the owner of Olive Garden and Longhorn Steakhouse. So same-store sales were flat. It was dragged down by Olive Garden, where same-store sales fell for a second consecutive quarter. Executives noted that their chains are outperforming the broader casual dining industry, though. And Longhorn Steakhouse is replacing Olive Garden as the gem of Darden's portfolio. It was the only chain to report same-store sales growth. And as well, supermarket operator Kroger topped estimates in the first quarter, but it's sticking to its forecast for the full year. The CEO expects consumer sentiment to improve, but said that many customers are still managing economic uncertainty. And in the first quarter, Kroger posted a drop in adjusted profit that still beat estimates. Executives are expecting a similar decline in earnings in the second quarter, and Kroger is trying to attract more customers by offering promotions, for example, and lower grocery prices. Okay, moving on from that. A cyber attack that is affecting some 15,000 auto dealerships across the US and Canada. And they're having trouble completing sales. So NTD's Sean Marshall is going to take a look at this.
Thousands of auto dealers in North America are still having trouble functioning Thursday after a software provider suffered a cyber attack. CDK Global software is used at 15,000 auto dealers in the US and Canada. On Wednesday, CDK said they are actively investigating a cyber incident. They have shut down most of their systems out of caution and was working to get things back and running as soon as they can. Later that day, the company announced that most of the critical computer systems were back online.
They got hacked huge. I don't care what they're saying, it was a hack.
But on Thursday morning, CDK sent dealerships another message indicating things had taken a turn for the worse.
The reason they're not releasing any information on cybersecurity hack is, first off, you don't want to advertise it. How did we find out? Well, if you can't purchase a car, especially in the bulk of the country, like 80% of the country was impacted.
While some dealerships were stopped from entering new sales into their electronic system, some dealerships were able to resume sales the old-fashioned way.
You know, it's interesting as we've become so reliant on calculators and computers and doing everything online, we forget that the old pencil and paper still works. And dealers were still doing deals that way.
The technology speed bump caused a BMW store in Manhattan to stop all new business, including scheduling appointments or car servicing. When asked how long its operations may be disrupted, a customer care representative for the store responded, "I truly have no idea." NTD contacted that BMW today, but we did not receive an answer back about sales being resumed before broadcast. We also have not yet got an answer from CDK on if the company has the ability to determine what customer data, if any, was stolen. Sean Marshall, NTD News.
And mortgage rates this week fell to the lowest level since early April, and that's taking some pressure off America's unaffordable housing market. The standard 30-year fixed rate mortgage averaged 6.87% in the week ending June 20th, according to mortgage financing giant Freddie Mac. This marks the third weekly decline. Freddie Mac's chief economist says the drop comes after signs of cooling inflation and the market expecting a future Fed rate cut. Still, though, mortgage rates remain higher than anything seen in the decade before 2022. Meanwhile, another data point out today showing new home construction in May hit the lowest level since 2020. Home builders are also dealing with higher rates for construction and development loans. Millions of borrowers will see their monthly student loan payments reduced starting in July. It's thanks to one of the Biden administration's biggest changes to the federal student loan system to date. So let me explain here. The Biden administration's new repayment plan, known as SAVE, will be fully phased in this summer. For most borrowers, the plan offers a lower monthly payment than other federal student loan repayment plans, and it cancels student debt for some borrowers after they make as few as 10 years of payments. Now, 2 Republican-led states have sued to overturn the SAVE plan. They argue that the Biden administration is overstepping its legal authority. In other news, between 2019 and 2021, the Consumer Financial Bureau reported a staggering 1,100% increase in buy now, pay later loans. But concerns are rising because right now economists, regulators, and analysts, they lack the means to actually accurately track the rapid growth of this buy now, pay later loan debt. Some have coined the term phantom debt to describe buy now, pay later debt that is flying below the radar. For more on whether this should be a cause for concern, I spoke to Ted Rossman. He's the senior industry analyst at Bankrate. Here's what he said. So Ted, thank you so much for joining us today. Thank you for your time. It looks like buy now, pay later, the use of that has exploded in recent years. Is there a concern here?
Some people are concerned. Phantom debt is a term that I've heard bandied about with buy now, pay later, because it often doesn't appear on credit reports. And sometimes it's hard to even wrap your arms around exactly how big this market is. It would be useful for lenders to know, for example, if someone has a bunch of outstanding buy now, pay later plans, or if they've fallen behind in the past, or also if they've used it responsibly. I mean, that's the positive side, is a lot of times consumers gravitate to this because they don't have great credit or they don't have any credit. And it would be nice if they got points for using it properly. Credit reporting has been a void for buy now, pay later. It's kind of a square peg, round hole kind of thing where It doesn't fit neatly into our traditional understanding of credit. And for that reason, it just hasn't been widely reported.
So the fact that it doesn't affect your credit score, would you say this is a good thing or a bad thing?
Depends. I mean, if you pay late, it's beneficial that it's not going to hurt you. That said, though, the buy now, pay later industry touts really low delinquency rates, which is really shocking to a lot of people. Really, what's been the biggest motivator has been the carrot to continue using these. The stick approach, which is late fees or credit score damage, that's not as prevalent in buy now, pay later. It really is more almost like the honor system. And if you want to keep using it, you've got to use it responsibly. To be fair, I mean, there are some teeth to this. They could potentially send you to collections or sue you for non-payment, although it doesn't usually come to that. The short-term nature is important to understand as well, that a lot of these are 6-week loans. And for that reason, and the buy now, pay later industry would say that they have this proprietary underwriting. It's not like a credit card where they give you a $10,000 limit and they turn you loose, and years later, who knows what's going to happen. The short-term nature has kept a lid on delinquencies. Buy now, pay later delinquencies are lower than credit card delinquencies, which is surprising to a lot of people.
Can you make it clear for us exactly who should be using this service and who shouldn't be?
My view is that the best use case for buy now, pay later is if you can get a good long-term, low or no interest loan. Like if you're buying a couch or a TV or a refrigerator, if you can get a promotion where you can pay $50 a month for a couple of years, that can work out really nicely. You spread out your cash flow. Ideally, it's low or no interest. You have to be careful, though, because the fine print varies a lot. The traditional buy now, pay later version was 4 interest-free payments over 6 weeks. Interest-free is nice, but 4 payments over 6 weeks is tough if you're paying $1,000 or $2,000 for the item. So, that's where the longer-term plan can help you out. But is it 0 or is it 15% or is it 30%? There's a lot of variability. That's been a big change in the industry the past couple of years. There are also physical payment cards now from Affirm and Klarna that you could use at the grocery store or the gas station, or that's kind of blending buy now, pay later with something that really feels very credit card-like. So that's been another big change. And then one other is more services. So it's not just clothes and electronics anymore. They're pushing more into medical, dental, veterinary, travel. I think buy now, pay later has a bright future, and there is a lot of demand there. But as a consumer, you do need to be careful that you're not overdoing it.
Okay, let me just ask you one more thing here. So of all the things that we discussed today, what would you say is one of the biggest risks of buy now, pay later, and one of the best benefits of buy now, pay later?
The biggest risk is overspending. You can trick yourself and you look at the installments. Maybe it's 4 $50 payments and you focus on that. Oh, $50, that's not so bad. You don't realize that you've really spent $200 or committed to spend $200 over the next 6 weeks. The real issue is when you stack these, and a lot of people have multiple plans running at the same time.
Ted, thank you so much for your time.
No problem. Thank you.
Okay, also happening today, the U.S. Supreme Court has upheld a Trump-era tax on overseas investments. So in today's 7-2 majority, justices upheld that the government could levy a tax on foreign investment proceeds that had not yet been received. So the case centered on a Washington state couple. They challenged a $15,000 tax bill on an investment in an India-based company, and the couple claimed that the profit at issue was reinvested and they never got them. The decision comes at a time when some Democrats are seeking to impose a wealth tax on the rich. However, Justice Brett Kavanaugh, in the majority opinion, stressed that the case was, quote, narrow and did not implicate the tax debate. And one more story here before we head to break. Students are underperforming, teachers are struggling. Senators explore a minimum $60,000 teacher salary as a means to improve education. Here's the story.
Education is broken.
The Senate Committee on Health, Education, Labor, and Pensions, or HELP, discussed America's problematic K-12 education system Thursday.
2/3 of U.S. public school students don't read proficiently in 4th grade, 40% are essentially non-readers.
Senator Bill Cassidy says schools are poorly educating America's children. Some lawmakers say higher teacher pay is part of the solution.
4 hedge fund managers on Wall Street made more money last year than every kindergarten teacher in America. Nearly 120,000 teachers.
Senator Bernie Sanders has introduced the Pay Teachers Act, which sets a $60,000 minimum salary.
Teachers should be compensated at the same level as other professionals requiring similar levels of education, such as architects and CPAs.
William Kerwin has studied high-performing school systems around the world. He found that other countries value teachers more than America does.
Teaching is a well-regarded and well-compensated profession that attracts talent similar to other high-status professions in these countries. Their teacher preparation programs are rigorous and certification standards are high.
Former teacher Robert Pondicio says raising pay won't solve the problem.
We have made teaching too hard for mere mortals.
He says teachers face many other problems, citing polls that show nearly half of all teachers plan to quit due to school climate and safety. About 40% of teachers have faced physical violence from students.
So by all means, raise teacher pay, but do not assume that it will solve teacher shortages or keep good teachers in the classroom. Poor training, deteriorating classroom conditions, shoddy curriculum, and spiraling demands have made an already challenging job nearly impossible.
Senator Bill Cassidy noted that the U.S. already spends more per student than it ever has before.
Here's spending. Here's inflation. So spending has greatly exceeded inflation. But even beginning before the pandemic, we saw a decrease in math scores and a decrease in reading scores.
He says new spending should focus on teachers and not on things that may not improve education.
All right, taking a quick break now, but coming up in just a bit, European Union countries agreeing more sanctions against Russia, including their first restrictions on Russian gas. And this week's rematch between basketball rivals Caitlin Clark and Angel Reese is breaking more records before it even begins. We have NTD's Dave Martin joining us to discuss. Stay tuned. All right, thank you very much for staying with us here. Let's quickly go over some more items for today before we go to the always interesting Dave Martin. Americans applying for unemployment benefits dropped last week from a 10-month high, according to the Labor Department. Jobless claims fell by 5,000, and weekly unemployment claims remain at low levels by historical standards. Honeywell will buy aerospace and defense technology provider Case Systems for $1.9 billion, and this deal comes at a time when defense orders have surged in response to conflicts, including the Russia-Ukraine one and Israel-Hamas. Now, paper versus plastic, that's the question. Amazon is going paper in North America. The e-commerce giant said it has already replaced a vast majority of the plastic air pillows used in packaging with recycled paper, and it hopes to go completely paper by the end of the year. And the European Union is targeting Russian gas for the first time. This is its 14th round of sanctions against Moscow over its war in Ukraine, and diplomats say the package bans re-exports of Russian liquefied natural gas in EU waters, and the sanctions stop short of banning imports altogether. That's because some EU countries still import pipeline gas from Russia via Ukraine. And the EU president said the latest package will strip Moscow of future energy revenue. Now, China's related story here. Its central bank has left benchmark lending rates unchanged. So the one-year loan prime rate is still 3.45%. New bank lending in China rebounded far less than expected last month, and this suggests that the world's second largest economy is still struggling to pick up the recovery pace. And now, finally, moving to sports and business news, we're joined by NTD's Dave Martin. Dave, good to see you. How are you doing?
Thank you, Don. Glad to be here.
All right, Dave. So I wanted to look at the increased excitement here in the WNBA this weekend. Now, in particular, that is concerning the ticket prices for a game between Indiana and Chicago. Very expensive here, the most expensive, in fact, in league history, at an average of more than $250. Incredible. What's driving this interest?
Well, I mean, it's a rivalry game. I mean, this pits Indiana's Caitlin Clark against, her college rival and now WNBA rival, Angel Reese in Chicago. Now, this is actually their third matchup of the season. The first two have, created a little bit of fireworks, actually. The first one, there was a flagrant foul on Caitlin Clark by Reese's teammate, that's Chennedy Carter. And then the second one, Reese herself was called for a flagrant foul on Caitlin Clark. Now, meanwhile, the game was televised on CBS. It ended up being the highest rated WNBA game on TV in 23 years. Now, in addition to that, Clark's Indiana Fever, they're playing a lot better. They started off losing 9 of their first 10 games. Now they won 5 of their past 7 games. Now, Clark has won each of the first 2 matchups so far, but both games were in Indiana. This one is going to be in Chicago, so it's a much bigger metropolitan area. I think that's also driving demand as well. Plus, that's closer to her home state of Iowa, where she started at Iowa University not very long ago and leading her team to back-to-back Final Four appearances.
All right, Dave, so here's the thing. If I wanted to go to this game, I would imagine a lot of people would. I mean, what am I looking at here for pricing, and how does it compare to past games?
Well, if you're for the cheapest seat anyway, on TickPick, that's $250. The most expensive right now is $9,000. I mean, that's very high. Now, as I said, this game is in Chicago. The average ticket price sold has been $253. That's nearly triple what the Chicago Sky's average ticket price for this season is. And that's even higher than what the Chicago Bulls average ticket price, the Chicago Bulls of the NBA for this past season. For Clark, though, this has been an ongoing thing ever since college. I mean, she just graduated a month or 2 ago. It was just then that her presence on the court was setting ticket prices there. Her final game, home game against Iowa State, the average ticket price was over $500. I mean, that's 10 times more than the average women's NCAA basketball game. I really think we're seeing, the beginning of something special for the WNBA here. It's almost like the PGA with Tiger Woods, like roughly 3 decades ago. When he came there, he brought all this excitement and fan viewership that just skyrocketed as soon as he started starring. So I think as long as Clark and her team keep improving, we're going to see this as a continual storyline, really this whole season.
Well, all right, Dave. Insightful, as always. Thank you so much for being here.
Well, thanks for having me, Don.
Okay, just one more thing before we go. The Las Vegas Sphere has quickly become an iconic part of the Vegas skyline, and it's about to get an update. So it is adding sound to match the exterior display. Exosphere CEO Jim Dolan tested the new feature last month. The system XO Audio will sync with content displayed on the exterior of the Exosphere. XO Audio will make its debut on the Exosphere as part of their 4th of July celebration, and the show has been described as a tribute to art, science, wonder, and the history of Nevada. All right, and with that, that's all the stories we have for you today. Thank you so much for watching today, and don't forget, business matters. Goodbye.